Hey guys, today's question comes from Jennifer in Houston, Texas. I've been offered my dream job with a company in Mexico City, but I'll need to move to Mexico to take this job. Will I need to pay taxes in both the US and in Mexico? Well, this is a great question, Jennifer, and congrats on the new job offer. Thanks so much for the question. Let's take a look at how US expats are treated for tax purposes in the United States. The U.S. tax code is quite unique from other countries in that U.S. citizens are taxed on their worldwide income, regardless of where you live. If your income meets the minimum filing requirements, then you're required to file a tax return with old Uncle Sam every year. So this means that millions of U.S. expats who qualify to file foreign income taxes and pay foreign income taxes in the country and where they live are at risk of paying income taxes twice, both in the foreign country in which they live and in the United States. But there's some good news for U.S. citizens living and working abroad. You may qualify for a foreign earned income exclusion of up to $112,000 for tax year 2022. But before we go right into the bank, you first must determine if you qualify for the exclusion. So let's go over who qualifies. To qualify, you must have worked for a private company, so government employees don't qualify, and you must demonstrate that you lived abroad for a certain period of time within the tax year. The IRS has created two tests to determine if you qualify for the exclusion: the bona fide residency test and the physical presence test. Let's take a look at each test. First, the bona fide residency test requires expats to prove that they are permanent residents in a foreign country. So you must be a resident of that country for an uninterrupted period of time that includes an entire tax year. When and if you come back to the US, you must have the intention of returning to your current foreign country of residency. Next, let's look at the physical presence test. To qualify under the physical presence test, you must have been living outside of the U.S. for 330 full days out of the year. Be careful when you track your time, because a full day counts as a full 24-hour time span from midnight until midnight. The physical presence test requires that you track your days outside of the U.S., but you're not required to be in one location like the bona fide residency test. So this is great for digital nomads or other foreign travelers making a living on the road. Now let's look at what tax form you need to file. To claim the foreign income exclusion, you must file Form 2555 with your personal Form 1040, your individual income tax return. Tax Form 2555 calculates the exclusion amount and must be included with your tax filing. There are a couple of other items to consider when working and living abroad. First, if you're paying taxes in the country in which you're living, you may be eligible for a foreign tax credit on your U.S. tax return. It's important to choose between the foreign income exclusion and the foreign tax credit wisely. If you claim the exclusion and then change back to the foreign tax credit, you can't claim the exclusion again for 5 years. The second item to consider is if you have a foreign bank account that exceeded $10,000 at any time during the tax year. You may be required to report that account on what's called a Report of Foreign Bank and Financial Accounts, known as an FBAR. This is a simple disclosure, but the IRS has extreme penalties if you do not file these. That's it. Sounds like you have quite the adventure ahead of you, Jennifer. Thanks so much for watching, and thanks so much for the question. Please leave a comment down below if you have any additional questions or you would like to follow up. Or if you have an unrelated question, make sure to leave it on our website, askacpa.co. Thanks a lot. We'll see you next time.